ForexPropFirm. I'm Emily and I'm your host today. Today we have the pleasure of picking the brains of one of our best traders. So we're going to be asking him all sorts of questions about his journey to getting funded and what it actually takes to be a consistent trader. So without further ado, Stan, would you like to introduce yourself to our audience?
Hey, nice to meet you guys. My name is Stan. I've been trading for quite a while. Probably this is the 13th or 14th year. Just recently moved into the prop firm space, and I've had a great experience with ForexPropFirm, and I would encourage folks to take a look at it. Fantastic opportunity.
So Stan, you've been trading for quite a long time. Had you been trading your own capital up until the point of using prop firms?
Yeah, I have. I've been trading my own capital, for regulation purposes. The PT rule have to have at least 25,000 to be a day trader. There are some ways around that, but they're a little difficult. So yes, I do trade my own money, and I've just recently moved into Forex and contract for differences and different opportunities. I've basically been in the stock market.
Amazing. So what made you get into trading all those years ago? What was it about trading that caught your interest, and how did you start?
Well, when I was young, everybody decides what they want to do. And I was attracted to, I guess, what appeared to be the lifestyle of a financial advisor stockbroker with the cars and nice things. And met up with some guys and started hanging out with them. And I think at the age of maybe 13, I started doing some things. And one of my buddies, I had asked his mom for some money. I wanted to place a soybean trade. Needless to say, she didn't loan me the money, and she regrets it now. But no, I've always had a feel for it and a passion. I don't think it's something that's an acquired taste. It's either for you or it's not.
Definitely. And I think that is the thing for a lot of people. They see the lifestyle that comes along with trading, and it is a lifestyle that people do want. I mean, I know you mentioned you had been trading your own capital and you still do. How long was it before you actually went into prop firms? I know you said it was quite recently. What made you have an interest into prop firms? I know you mentioned briefly, but that's like after quite a long time of trading your own capital, that is very different.
I didn't really realize that prop firms existed at this level. I think this is fairly new. I tried to start a small hedge fund. It really wasn't. It was just a group of people that saw what I was doing and they wanted to put some money together. And we went down that road and found that there's a lot of regulations, accounting, and just to get started, the monthly fee is really high. Plus the challenges with managing somebody else's money is, it just wasn't feasible. So I stuck with doing it myself. And then, the prop firm space kind of opened up around COVID. And I said, gosh, I forget the math, but, let's say the challenge is $100 and you can have 100,000. You can't go to the bank and borrow $100,000 for that type of money. And yes, there is a percentage that you give to, the prop firm for, risking their capital. But at the same time, the average person, can't get their hands on 100,000, 200, or even, $400,000 with that type of minimal entry and risk.
That is so true. And I think that's a big thing about prop firms these days. I know personally myself from trading experience, there's nothing quite like trading your own capital, winning only to get a marginal fraction back because it is just your own account, and feeling like you haven't really achieved as much as you believe you should have because of your capital limitations. So it is a massive one. It is a low risk for such a high reward. It's just you've got to take into account there are different things to consider, like the different kind of regulations and rules that each prop firm set. I mean, I know you mentioned you recently found out about prop firms. What made you come to ForexPropFirm specifically?
Well, as an outsider, looking at all the different, opportunities, you can compare and contrast. And of course, the experiences other people have had. There's some, firms that, their management seems a little more in tune with what's going on than others. But, it's such a new space. It's hard to tell who who to go with. And I, came to, ForexPropFirm, and everything looked good. There wasn't any red flags. I'd seen a couple interviews with the CEO and the founders, and I said, these guys look, reasonable. And at the end of the day, what's the worst that could happen? And really, the worst that could happen is you don't pass a challenge and you've lost a little bit of money. But if everything follows through, it's a great opportunity. I think the key points would be, the no daily drawdowns, because a lot of times you're in a position and you need a little bit more wiggle room. I understand why it's there, but I understand, the benefit if I were the prop firm allowing the traders to do that. But the prop firm, they've got risk too. If they give you 100,000 and 10%, every time you max out, they're losing money. So they're taking a risk on you too, so they have to protect themselves. But at the end of the day, I think once they identify, the traders, those relationships can form. I think of it kind of like a baseball team. Here in the States, we have high school baseball that goes to college, then the pros. And along the way, people move up to different levels, and eventually you get to the major leagues. And not everybody makes it, and of course, some people spend a lot of time and energy, in different levels, and everybody sees the success, but they don't see the behind-the-scenes work that it takes.
Definitely, I think there's a few amazing points overall that you've made there, but a few ones that stand out for me, like you said, is being able to see trader interviews. There's a difference between obviously being told you're going to be paid out X, Y, and Z, and then actually hearing from people who have experienced it themselves, which is, in my opinion, a massive trust builder for when I'm looking at prop firms and when I was looking myself before I came to ForexPropFirm. And then on top of that, like you mentioned, the drawdown, that is so big for some people's strategy, because like you said, a drawdown of 5% might work for a lot of people. On the other hand, someone else's strategy, that could be major, not being able to have that wiggle room. So I'm glad to hear that really did benefit you and your strategy, which brings me nicely onto my next question, Stan. So, I mean, in terms of your strategy, was there anything or any tweaks you had to make or changes you had to make to your strategy for it to work with the prop firm challenge once you started, or did you keep things exactly the same?
There were some minor tweaks. I think the main one is I'm a little more aggressive with my capital. So I understand, the drawdown and what most people do. But I would categorize myself as a momentum trader. So I look to buy high and sell higher. And if you have a position that's going the wrong way, of course, there's a stop loss. But my stop loss based on my entry and what I'm willing to tolerate may be a little bit different than the daily drawdown of 4%. So high risk, high return, easy come, easy go. But, I do understand with somebody else's capital, they have regulations, which is, understandable. But didn't have to change much. There's not any particular pairs that I trade. To me, it's more of a feeling. I'll trade anything that's moving. It's just a matter of, figuring out what you see, and when you see it, how to take advantage of it.
I think that's something you mentioned there that is quite a big one that I've noticed from experiences myself in the past, which is the risk to reward amount. You mentioned high risk, high reward, which can be quite controversial for some traders and loved by others. I personally find it quite hard to have, say, a 1 to 2 RR when using a prop firm challenge, because I feel like it takes a long time to get to the percentage. It sounds like with you, Son, you might have quite a high RR for each trade you trade. What do you think? Do you think you need a high risk reward ratio to be able to pass these prop firm challenges, or is there a particular amount you go for every time?
No, absolutely not. The first thing that comes to mind is, say, buying a car. You know what kind of car you want, color, features, and then you just spend a lot of time looking for, the right one. It may take you a week, it may take you 2 weeks, but when you identify something that makes sense to you, and meets your parameters, then you take a risk on it. Statistically, it's a 50-50. It's either going to go up or go down. So if you can move that in your favor a little bit, then you just have to make more money, then you lose. So if you're willing to, risk 100, then if you make 102, you're ahead. So you just have to win more than you lose, and keep that difference small.
So you're quite on the opposite side of me. You believe that even a 1 to 2 RR, you can make it work with a prop firm challenge. Would you say that?
Absolutely. But if you're going to just kind of set it and forget it, if you're swing trading or long-term trading, then that makes sense. You could set all your positions and let it happen. Think about fishing. I don't know if you've ever fished, but you've got the lake, you've got the fish, and yeah, so you go to where the fish are, and you may be a little more aggressive in trying to catch them. But if you're out in the middle and things aren't going well, you're not going to use the same strategy. And then ultimately, if you could figure out where the fish are, you could save yourself a lot of time. But when you're fishing, do they want worms? Do they want crickets or minnows? Because they just might not be biting. But when you see action happening, you got to be willing to step in and take a little bit of risk. But if you're sitting out in the middle of the lake and you haven't caught anything, then we're probably not going all in if there's no action.
Definitely. And you've kind of already answered one of my questions I had for you, which was, is there any particular pairs you trade? But you already mentioned you kind of go wherever the markets take you and whatever looks right. What's your strategy behind that? Could you give us a little bit more of an insight to what you actually look for?
Well, the same thing. Let's go back to fishing. If it's really hot, the fish are going to be deep in deep water. If it's really, cool, they're going to be in shallow water. So let's say you walk up to a nice stream, it's a nice day, and there's a nice area that looks like there might be fish there. So you go to that area and you wait, and if you see them coming to the top eating, or you see some action, then you jump in. So I have a set of criteria that are flexible, but you have to meet a certain standard. And then once you see that, dial in, and then maybe small position size to see how it goes. And then if it's going well, work that position up or down. And then if it goes the wrong way, you might cut it. That might be where you do your 2 to 1. But if you are maybe in a little bit too early and you want to go off a resistance, you might take it all the way down to there. So it's hard to set all that in the beginning, because some of it has to be fluid and you have to know what's going on. Think about baseball. The pitcher's throwing different pitches. The batter has all the skills and tools, but you're not going to be swinging for a home run if it's a full count and the game's on the line. If you're ahead in the game and it's the first pitch, swing away. What could happen? So I look at the downside risk, and then I work up from there, which is how much am I willing to lose for this opportunity?
Definitely, and I think our viewers would have really liked and found that interesting, listening to some of the things you take into consideration that maybe they are or aren't doing themselves at the moment. I mean, how important would you say it is, Stan, for our traders out there to be back testing these kind of criterias and strategies before they move on to a funded account?
Well, it depends on how you view a funded account. You can view it as paper trading. You can view it as practicing without a lot of risk. But ultimately, the tools that are available should be used, but it depends on to what extent. So let's go back to baseball. You can be in the batting cage and take a lot of BP. You can do a lot of things, but really where it happens is when you're on the field and there's a crowd and things are going on. So you can build the foundation and the basics, back testing and doing everything. But at some point you have to step out and feel the pressure, see what it's like when you mean to type in 10, but you type in 100, or you close in a position that you didn't mean to close, or your internet goes out. Those things, you can't prepare for. So there does need to be a level of risk on the line. It's just a matter of, how much you can tolerate. And there's no substitute for experience and being in those situations, because that will help you next time. Think about it like a relationship. You're with a guy or a girl, things are going great, but then it explodes. So the next time you go in, you go, we don't want to do this, we want to look for this. And then you get a bad feeling, you move on to the next one, until finally you have enough experience to put things together and say, I probably need to go to trader rehab. I don't need to take any positions this week. I need to practice on base hits. I'm only going to take one trade a day. Whatever it takes for yourself to kind of get back in the groove And I think that's where coaching and accountability can be, useful. I mean, if you look at the greatest athletes and performers in the world, they always have somebody there to help and coach them. And they're definitely not any better than they are, but they're there to kind of recenter and say, Emily, look, this was a disastrous week. Your goal was just to make, $500 and don't lose any more than 200. And, move on to the next week and then review it, see what's happening, come in, make some tweaks, test it, and then actually, go back and, try it again. And that's just a process that continues to go until you find, the parameters that work for you.
Definitely. And I mean, with that being said, that's an interesting way to look at it, that maybe a lot of people are taught and think by what they hear online that you should be back testing more and more before you go into a challenge, but actually there's no quite experience like actually being in the real thing, like you said. I mean, for yourself, Stan, how many times did it take you before you passed your challenge, or did you manage to pass first time, or did you have a couple of attempts?
It was up and down. Emotions play a role. Instead of back testing, I said, okay, if you open one big position and just let it ride, what happens? If you go in and you do a couple of swing trades, what happens? So you just kind of map out the different options there are to do something, and then you do it and you see. So I looked at it more of as an education than the money. So anything that takes time to do usually happens in fours. So you go to college for 4 years, I guess in UK it's university. I went to med school, that's 4 years. So I just looked at the risk reward. If you're going to spend 2,000 hours to become proficient at something, how much money are you willing to spend? And, to go get a degree from college, that's 250 to maybe 500,000. So if you invest that amount of time and energy into a skill, I think it would pay better. But looking at it that way, it didn't happen for me. So I've got debt, I've got employees, I've got a whole list of things that comes with being an entrepreneur. But at the same time, I think that if I had to do it again, that time and energy invested into a specific skill like fixing teeth, if you invest that in trading, what is the ultimate outcome? But ultimately, just like whatever career path you choose, you have to have a certain foundation, and then you can build from that. Some people are meant to be on TV and some are meant to be on radio.
Do you think, Stan, with what you said, where you do have your other businesses, which I'm sure must keep you very, very busy, do you almost feel like that helps you with your trading, and you would recommend other people to not just rely on trading solely?
No, I think you have to get good at one thing. The problem is most people don't have the luxury to just focus on trading. But if you just mapped out your day, you would say, eat, sleep, focus on trading, family, and then me time. And if you can, look at the 24 hours in a day, I don't see why you couldn't devote at least, 18 hours, 12 hours, to that. You only really need to sleep maybe 4 or 5 hours a night. So everything else could be done focusing on one skill. And for me, instead of backtesting, I like to, watch charts. So it's kind of like watching a movie to me. You watch it and you sit there, maybe watch it and don't take a trade. But if I'm not trading or working, I just ask myself, whatever situation I'm in, is this getting me closer to where I want to be or further? And sometimes it's fun to play, but if you're sitting around, scrolling on YouTube, pull up a chart and watch the chart. And then after a while, you'll see some things that are consistent. And then when you see that, that's when you go all in, kind of like a relationship.
That's really, really good advice. And actually, I feel like I'm going to go start spending my evenings rather than watching Netflix. I'll be watching charts. So thanks for that stuff.
But here's the deal. Here's the deal. Motivation leads to breakthrough.
Yeah.
And until frustration leads to breakthrough. So until you're really frustrated, there's not that, sense to go do something. And most people are okay, they're complacent. And, but if you're down, you have no money, and you look at, what are folks doing? I mean, you can play the lottery, you can go to the casino, or you can go to the biggest casino in the world, which is the stock markets and the exchanges. It's not gambling, but it is, depending on how you do it. But the return on time and energy, I have not found anything else that I would spend that amount of time on. So I was fortunate I spent time and energy on a business that can provide me the ability to do other things. And the other things is trading. But over time, that slowly transitions. So really, part of it's not always about the money. It's about the challenge. Can you get kicked in the face and get back up? Or how does it feel when you walk away and have a good day? Say you make $1,000, and then you're like, hey, that's not enough. I need 3,500, and then you lose 2,000. So then you go back and reevaluate yourself and say, hey, what happened and what's going on. But once you find your system and then you repeat it, there should be a consistent outcome. So then you can apply that to different things. But most people don't know what their system is because they've never done it. So you could be, again, back to fishing. The guy could tell you that this is the best place to fish, but there's no fish. You're going to waste a lot of time. So if you can find a guy that's catching a lot of fish and can prove that he's catching fish, then I would probably just do everything he tells you to do, because there's no secrets. There's no new problems. Everything has been done before. And the best thing to do is find the person that has what you want and just copy what they do. That'll save you a lot of time, but it's hard to do because that level of trust is kind of challenging.
I've started to learn that as well recently in life, that just copy what people are doing. And if you can, try and do it better, but don't always try and obviously change things, because sometimes it is great the way it is. But really, it is a life hack. Just copy what the people who are doing well are doing, and you'll all hang around with people who are doing well, and naturally you'll end up doing better yourself, or different opportunities will present.
And these folks, they want to help. They've checked all the boxes, and there's nothing better than helping somebody get what they want. Whether it's money, a relationship, or just whatever it is, what can I do to help? And when you find some people and you help them, that's way better than any other return that you can get. But the hard part is finding those people, and then letting those people kind of take control of themselves and do what they need to do. I don't know if you have kids, but I'm sure some people out there do. It's the same thing. You tell them what to do, but they don't listen, and eventually they do, or they figure it out too late. But the piece of advice is find the person who has what you want and do what they do, and don't take advice from people that have less money than you, have crappy relationships. Learn from those people what not to do. But if somebody has caught 50 fish in one day, I'm probably going to go fishing with him, not the person that's sitting on the bank and has nothing to show for their time and not taking it serious.
Well, I read a quote the other day just on that said the only advice you should take from people who aren't doing well is don't follow my advice. Is the only advice that you should take from these people. And as you said, learn what not to do. Well, Stan, I appreciate your time today, because you've been absolutely fantastic, and I know I've kept you here quite a while in terms of the questions and the bits we've been going through. I could probably talk to you all day. You're so wise and interesting to conversate with. I think one thing I'd like to end it on, to leave with the viewers, is one piece of advice that you would give to anyone taking their PropFirm challenge as a funded trader.
If you're the smartest person in the room, you're in the wrong room. So take your challenge. Don't lie to yourself. You can lie to other people, and then get some help. Find somebody that you can emulate, somebody that's willing to help you. It'll save you a lot of time. If you choose not to do that, minimize your risk and take small share size, play around until you figure out what works for you. And you don't necessarily have to trade with real money. Open a demo account, try different things. For me, that just wasn't as much fun as having something on the line. It made me, work better. And then ultimately decide if you're doing it as a hobby or if you're doing it as a profession, because that's going to change the amount of time you put into it. It's going to change a lot of variables. It's not a get rich quick scheme, because it has to be duplicatable. And if you can duplicate that success, if you lose 50, you'll be able to make 100. But if you don't know how to make 100 and you lose 50, you're going backwards. So It's 2 steps forward, 1 step back, 3 steps forward, 5 steps back. So it's back and forth until you can gain that consistency. And then once you see you can do it with small share size, then you can scale up. So if you're consistently making $1, if you scale up 100-fold, now you can make 100. And then just keep your losses small, and winners big. And then, of course, the famous don't forget the 2 rules of investing or trading. First rule is don't lose money. And the second rule is don't forget rule number 1.
Yes, I love it. Sam, brilliant advice to leave us on. I just want to say a big thank you for your time. I've learnt a lot, and I'm sure our viewers have too. And of course, just to my viewers, our viewers here at ForexPropFirm, if there's any questions you specifically want us to ask our traders next time, please leave it in the comments. We do read them. I'll make sure I get them included. And of course, don't forget to like and subscribe to the channel, and go get your PropFirm challenge through our website link bio. Thank you, San. Have a lovely evening, and to all the viewers, good night.